Hi guys, welcome to the final part of week 3 in accounts receivable and accounts payable management. So far we've talked about cash receipts, petty cash. We've talked about good control systems to have so that you can make sure that cash doesn't go missing, you know where the cash is. There's good checks and balances system in your accounting process so that everyone is aware of what the other person is doing. There's transparency, there's accountability, and generally that there are good accounting systems in place so that everything is efficient. If we have the basics down in accounting, in our processes and our systems, then we can spend more time in the more important topics and we don't have to constantly worry about things going wrong, things being incorrect, things going missing. But sometimes there are things that we need to double check, and the basis of almost the theory of accounting is checks and balances. That's everything in accounting is to have, the purpose of it is to have a check and a balance so that you can make sure that you're doing everything correctly. And that's what we're going to be covering in this video. So now we're going to talk about our cash process and how it impacts banking procedures. How do we as an accounting department relate to the bank, and what are some things that we need to do? We're also going to be covering the bank reconciliation statement. Sometimes our books, what it says we should have cash on hand is not necessarily what the bank says we have in hand, and we need to make sure that we're aware of the differences, kind of like balancing a checkbook corporate sense on a corporate level. So, the first thing we're going to talk about is writing a check, endorsing checks, making a deposit, preparing a deposit slip, and then of course maintaining a checkbook balance. This is what a check and a check stub looks like. I'm sure most of you have seen this, and the thing is, in personal lives, we're almost even moving away from checks. Even in our personal lives, people aren't writing as many checks anymore. There's a lot of online banking and credit cards and that kind of stuff that we use, we'll talk about later, but really, even businesses are moving away from old school. It's still going to be around for quite a few years, but it's not as big of a deal as maybe, say, a couple decades ago when it was the only way to make payments. So looking at this page, we're going to say, number one, this check is a negotiable financial instrument. It represents cash, it represents money, and it is an authorized tool to officially approve a transfer of the cash or a transfer of the assets from one account to another account. So we have two checks right here in front of you. We want to make sure that when we look at a check that we notice every single element before moving forward into some of the other things. So let's say, for example, we have the pay to the order of who is it that we are paying. We want to put the name of the business. We never, as we said in the previous video, we never want to just say cash, because looking back, we're going to say, okay, well, who cashed this check? Even though technically, if you have a check that says pay to the order of cash and you present it, you should be able to cash that check, but that's not what we want. We want this to be to a specific person or business. We want to put in the amount, not only the figures, but also we want to write it out for safety and security to make sure that there's no mistake, nobody's added an extra zero or anything to that effect. We want to have a memo for our internal records because we need to know what it is that we are paying for. Many companies, ours included, will go through thousands of checks and trying to keep them all straight of what happened, what were they for, who were they for. All of that is important to keep straight, of course, so having a memo helps you keep track of it. And of course, we need the signature to make sure that it has been approved. We talked about the cash payment procedures, controls in the last video, so we won't be returning to that. The first thing we're going to look at on the stub side is to see the balance. If you're good at this, it will make sure that you're keeping track of how much cash you should have in your bank account and how much you're spending. So even if a check isn't cashed, then you're not going to be taken by surprise in a couple weeks or months whenever someone does cash a check and say, whoops, where did all that money go? I wrote one too many checks. If you're keeping track of how much should be and shouldn't be in your account, in your balance, then you can write checks with more ease. So the total is $12,025 with 50 cents, and this check is going to deduct $1,500 from that total. this is helpful so that we're saying, as of right now, there should be a balance of $10,525.50. Now, nobody hand writes checks anymore. Most people are going through an accounting system like QuickBooks. So in QuickBooks, there'll be a cash register that will automatically calculate this for you that you won't have to keep track of. However, like our purpose is to show you both conceptually and in the software application so that you're familiar with both, so that you can know what to look for. So consistently, you want to know what the balance is, and you want to know the difference that each check will make. So we have the check amount, and then of course we want the balance. These three items are very important, making sure that we keep up with exactly how much cash we have on hand and how much cash we can promise to pay, how much we can promise to spend. So there are different types of endorsements. There's a full endorsement, a blank endorsement, and a restrictive endorsement. So a full endorsement is you're paying to the order of Max Out Sporting Goods, right? So, I'm sorry, from Max Out Sporting Goods. And the blank endorsement says, hey, this is from Max Ferrero. It's just to whoever needs this check. Very risky, very very rarely would you ever use such a blank endorsement. And then finally, a restrictive endorsement is, well, we're going to be depositing we're going to be making this check out, but it can only be deposited. It cannot be cashed. So you as a business can also determine what kind of endorsement is there going to be. Because like I said, there is a real thing called check fraud, and so people can create checks or duplicate checks that you have. So, or even, take a blank check and do whatever they want with it. So you want to make sure that everything is endorsed correctly so that it is handled correctly by the bank. So sometimes we receive checks or we receive cash or something that we want to put into the bank. So when we receive a check, we would endorse it by, if we want to make sure that nobody cashes our check, we want to endorse it so that they deposit it straight into our bank account. Or we want to say this is going to be cashed and we're not going to put on the restriction of for deposit only. But what I do want to point out is that we have a slip that we have to prepare. Every company would have this, that you write down exactly what is on there so that when it's deposited, you have proof of what is included on here. So if we have 5 different or 6 different checks that are being deposited all in one go, when you're in QuickBooks, you will select all 6 checks and make one deposit so that your bank matches QuickBooks. Your bank deposit should be equal $4,860, and in your book, you're going to group all of these cash receipts together, whether it's by physical cash or by check, and you're going to group them all and make one deposit as well. This way, when you're working on your bank reconciliation, which we will talk about in a second, this way it'll make sense and it'll be easier for you to find discrepancies. Notice you want to have the date on there so that again it can match your books, and finally the account number on there so that you know which account it's being deposited to. I remember one time I was working on a bank reconciliation statement and the bank accidentally deposited to a wrong account. So I'm working on a reconciliation and I'm not seeing any of these transactions that are showing up in my book. They're not showing up on my bank statement. So initially, before I figured out what was going on, I started panicking. I said, where's all this money going? We're depositing it. I have proof. And then finally, of course, after I calmed down and I looked it up, it was a pretty simple error of they just deposited it into the wrong account. Now, of course, even banks, there are people working in banks. So we said anytime people are involved, the room for error grows significantly. So that's why we want to have these types of slips so that we can always refer back to it and say, okay, where was it? Which account was it supposed to go into at least? What was on that deposit slip? Did you receive all of it? And it would be really good for you to keep a copy of it as well. It would also be a good idea to keep a copy of all the checks that you are submitting to the bank. So if the bank, God forbid, loses one or something, you at least have proof of, I didn't lose it, I sent it to them, and then you can take it from there. It's always good to know exactly where the if there's a miscommunication or there's a breakdown in the system, to know where it happened. Not just so that you can cover yourself, which is important, because in an environment and community with so much fraud, you want to make sure that you are blameless and you don't take on any unnecessary blame. Not to throw anyone else under the bus, but so that you can improve on the system so that it makes you're sure that it doesn't happen again. So we just want to make sure that we have exactly dollars and cents, whether it's in currency, and then we want to make sure there's coin, and then we want to list all the checks underneath it. So, like we said, sometimes there might be checks that you write that somebody doesn't cash. In our books, we said cash decreased because we're making a payment, but in reality, cash might not have decreased because they haven't cashed the check. So how do we keep up with the difference between the bank and the books, right? We can't only record the cash payment when the check is cashed, because that'll be so difficult for us to keep up with, and it won't be accurate accounting. What are we going to put in there until then? Right? So right now we want to make sure that there's a process for reconciling the differences, and that's called the bank reconciliation. Sometimes it's due to errors. Sometimes the bank will make an error. Sometimes the business or the books have an error in it. Maybe it's not necessarily an error, or it might be just a delay. For example, the last day of the business month, at the end of the business day, you go to the bank and you make a deposit. Well, that deposit, even though it's going to show up on your books as if it was on the last business day of the month, next month it might only show up in the bank. So when you're doing your bank reconciliation, it might show up, say, in July in your books, but the bank deposit might only be in August. So if you're reconciling July, you're not going to see that. So of course we have to take that into consideration as well. Sometimes the bank will make an arithmetic error. It's very rare because it's getting more and more automated, but there are times when they will transpose a number or something was just added incorrectly. Most banks are good enough at catching those and having a quick correction, but sometimes there are just pure arithmetic errors. Sometimes they'll give a credit to the wrong depositor. Like I said, they might take a check and deposit it to the wrong account, and you're like, where's that check? I deposited. I have proof that I deposited. Well, they might have made an error. Or they might make a payment. Somebody else made a payment and they charged us, and that's happened before as well. What is this charge? I've never paid for this. I don't know why this is there. Things like this happen all the time. That is why we reconcile the monthly bank statement, so that we can catch these errors and not pay for other people's mistakes. But the business can also make some errors as well. Just like the bank can transpose a number, which means, flip them around or something like that, a business can do the same thing. You meant to pay $1,200, but you ended up typing $2,100. Well, even though your deposit will say $2,100, your bank might only say, well, we really only received $1,200. So that error, can be very easily made and very frequently made, but that's again why we do the reconciliation. Sometimes we just forget to record a check or a deposit in our books. We received cash, we made the entry, but we forgot to put it in our books that we actually did that and we went through that process. So we might see something on our bank statement and say, okay, where's this $2,000 from? I have no idea. Again, it could be just because you forgot to record that you received a check, or that you wrote a check or a deposit. Again, you might record it for the wrong amount. Again, this is the same as the arithmetic error. Sometimes you just added up incorrectly, you just wrote it wrong, doesn't matter. These errors are something that we need to guard against, because of course a cashless business is a bankrupt business. If you don't have cash to make your payments, nobody is going to care. So yes, you want to make a profit, and yes, you want to make revenue, but if that doesn't translate to cash, increased cash, then it's pretty much not worth it. Doesn't even count. Many banks require that errors in the bank statement be reported within a short period of time, usually 10 days. So if you are always keeping up with your bank reconciliation at least once a month, then you'll be able to catch it. Again, like I said, most businesses will have their own check and balance system, so that if they do make an error, they will catch it by themselves. So, other than errors, there are 4 reasons why the book balance of the cash might not agree with the balance of the bank statement. And this is what we talked about, the delays and stuff. So, outstanding checks. We wrote a check that has not been cashed. Our book says cash is down. Our bank doesn't say that cash is down because it's still in the bank. And no, they don't know that we wrote a check and because nobody else has come to cash it. Deposit in transit. This is the example that I was giving you, where if we make a deposit and we show that it's deposited in our books, but really it was over the weekend or something happened that it delayed it, so that it doesn't even show up in our bank statement until later, it's in transit. It'll show up in our bank statement eventually. Service charges and other deductions not recorded in the business records. Sometimes the bank will charge you interest or an analysis fee or something to that effect where you don't even know that they charged it until you look at your statement. Whether if you have gone into, if you've overdrafted and you went a little bit too far because someone cashed a check and you weren't sure, and that happens all the time. Sometimes there are some seasons everyone cashes a check all at once, and there are some seasons that people just hold on to their checks. It's not good, but sometimes because of that there might be a service charge. Well, we just have to show that because it's on the bank statement, we have to put it into our books. So it can be summarized as it's on the books but it's not yet in the bank, or it's in the bank and it's not yet on the books. And we have to make sure all transactions are in both places. Deposits such as collection of promissory notes are not recorded in the business record. So if someone has a direct deposit or something that they might put into your bank, you won't know until you've checked it that it's actually been received. So if they don't let you know and all of a sudden you see this cash, well, this deposit is there, but where does it come from? Where is it? You'll have to figure that out so that you can record it into your books. So what does a bank reconciliation even look like? There are 2 halves of it. The first half is the bank part. We're going to say this is what the bank says we have. Okay? Then you're going to add the deposits that should be in the statement, but it's not there yet. So you have it in your books, but it's not in your bank. So you're going to add those, and then you're going to subtract the outstanding checks, saying, okay, even though this is what I have in my bank statement right now, I know that these checks are eventually going to be cashed, so I'm subtracting it so that you know what's going to be there. And then, of course, depending on what errors they made, you want to either add it or subtract it. If you do that, you will get an adjusted bank balance. This bank balance takes into account everything that will eventually affect it, whether they're late deposits in transit or they're outstanding checks. So that's the bank side of it. That's the first section. We're taking the bank balance, making adjustments, and then having the adjusted bank balance. So these are things that are in the books that do not yet reflect on our bank statement. For this, there's nothing we can do except wait. Wait until these deposits come in and wait until the checks have been deposited as well. Then the second section is something we can control a little bit more. This is, we're taking how much the QuickBooks or whatever our software is, we're seeing how much we should have in our bank statement per us, right? And then we are adding the deposits that are in the bank that we haven't added yet. So if someone did an online payment straight into our account and we don't have records of it, it's in the bank. So now we have to add it into the books, make those corrections. This second section is a little bit easier because we're just entering transactions that either slipped by or we forgot about or we're just making corrections of. And then of course we have to do our deductions. If there's a bank charge that was on the bank statement that is not in our books, we just have to do it. So the first section, we just have to wait so that the outstanding checks and the deposits in transit will reflect it. We don't really take an action. But in the second section, we have to make sure that we record everything that has not yet been recorded. So that is going to be the adjusted book balance. I want to repeat this one more time. In the first section, we're taking the bank statement and we're adding the things that we're waiting on. Things that have already been in our books that will eventually show up in the bank statement. In the second section, we're taking our book balance and saying, this is what will be happening that we know of, and then we add what we don't know of, so that it reflects eventually the adjusted bank balance. So in total, initially, first section and second section don't balance. We have to make them balance so that the adjusted bank balance and the adjusted book balance are equal. If they are equal, it means you have reconciled your bank statements. You can account for every single dollar. You know which ones are not showing up. You know which ones will show up. You account for every single deposit in your bank statement. You account for every single charge on your bank statement, and everything is working out. So in QuickBooks, what does this look like? So when you open up the reconcile statement, you're going to enter the balance per the bank statement as of the end of the month. So you'll be working on two things. You'll have your QuickBooks in front of you, and you'll have your bank statement, whether you print it out or whatever works for you. I like to print mine out. You have it in front of you, and they'll say, what was the bank balance at the end of the month? You enter it in, because that is almost non-negotiable. It is what it is. It was either there or it wasn't there. This is how many physical dollars was in our bank account at that time. So we work with that, and then we start reconciling. On the one side, on the left side, we'll have all the cash payments, and on the right side, we'll have all the cash receipts. Personally, I like to separate all the debits and the credits. All the debits will be on the cash payments, and all the credits will be on the receipts. This is the opposite of us in our books. In our books, we say credits go down and debits go up, because it's an asset, right? However, if you look at it from the bank's perspective, if they pay us, right, it was a liability. For us, our cash account is a liability for the bank. So it goes down on the debit side and it goes up on the credit side. That's why it goes down cash payments on the debit side, and it goes up cash receipts on the credit side, because we are their customer. They owe us money that we have deposited into our account with them. But basically what we're going to do, you'll see in QuickBooks, is we'll have the payments on the one side, the receipts on the other side, and working through my bank statement, I'm going to select all the matching items that are on QuickBooks that appear on my statement. So I see on the right side, I see a deposit for $30. I select deposit for $30. I see a deposit for $50 on the first. I select $50 deposit on the first. And I go through and I make sure that everything that is on the bank statement has been selected in QuickBooks. That's part one. Part two, we're going to say, okay, looking at my QuickBooks, what has stayed unchecked? So there was a deposit on my books that say is for $100. Why is that not showing up in my bank statement? All of these have to be investigated. If it's showing up in the book and it's not showing up in the bank, is there an error? Or was it just towards the end of the month and it'll be reflected next month? Right? So all the unchecked items, are they going to go through, or did I accidentally record the same deposit twice? Or did I accidentally change the numbers? If I have a deposit in my bank account for $1,200, but in QuickBooks it says $2,100, I need to see, okay, was this the same thing? Did I just transpose the numbers? Did I just switch the 2 and the 1 around? If you do all your research and you find it, then you can correct the error and then just check it off. Then the second step is, what is showing up in my bank statement? So I've gone through my bank statement and I've highlighted everything that I've checked off. What is showing up in my bank statement that I've not highlighted, that I have not checked up? So I'm going to go to that. I'm going to go to my bank statement and I'm going to look at the description, and I'm going to look at trying to figure out what entry is missing. I'm going to go back into QuickBooks and then enter that transaction once I figure it out. Sometimes this can take a couple days because you might not know, nobody in your department knows, your bank is trying to figure out where this deposit came from. So it could take a couple days in calling your bank and looking up, all sorts of things. And then once you figure it out, you put it in QuickBooks. Because remember, sometimes things happen to our bank account that we don't know about. So we want to enter that transaction, and then we can select it and highlight it on our bank statement to say that we can account for it in both places. That's ultimately what we want to do. Every single cash transaction, can we account for it in the books, and can we account for it in the bank? If it's in the bank, not in the books, we just add it. If it's in the book, not the bank, we just wait for it until it showed up. Again, the difference has to be 0.00 if it's correctly balanced. Only then can you have can you reconcile the difference and say, okay, this bank reconciliation is complete. We can never go back and make any changes to any transactions in the past that affect cash, because that will undo the reconciliation, and maybe the bank isn't reconciled anymore. So QuickBooks will almost do this. We did step 1 and step 2. QuickBooks will do that automatically. So what we're going to do is learn the manual process now as well, so that you understand what QuickBooks is doing. God forbid you ever have to do this manually, but if you understand the process of doing it manually, then you'll be able to troubleshoot if ever QuickBooks is giving you a problem. So how do you do it? First section, you want to start with the bank balance amount. So what does it say that we have? We're going to compare the deposits in the checkbook with the deposits on the bank statement, saying, do we have all of them? If not, what's missing? List all the outstanding checks. We want to say, okay, which of these have not been cashed? And then we want to see any errors if we can figure them out. Finally, we want to compute the adjusted bank balance. So this is a step-by-step written explanation of what you just saw visually. We're going to add all the things that are in our books, all the deposits that are in our books that aren't yet in the bank, and we're going to subtract all the checks that are in our books that are not yet in the bank, and of course any errors. Once we get the adjusted bank balance, we want to make sure that it's going to match the second section. So again, we're going to take the ending balance as of end of month. What was the cash balance? We're going to start with that, and then we're going to see, okay, what is in our bank statement that is not on here? We're going to record those deposits in our books. What is on here that has been subtracted that is not in our books? We're going to record those deductions. Like I said, first section is mostly about waiting for it to reflect if there are no errors. If there are no errors, all you got to do is wait. If there are errors, you got to list those errors and make corrections so that it balances. But in the second section, you are going to be recording entries so that your books balance with your bank balance. And then finally, you want to make sure that there are any errors, whether it's our process, our errors, or the bank's errors, or whoever's errors they were. We want to record them so that we can know at least where the discrepancies are. Finally, we want to compute the adjusted book balance. It's not the real book balance, it's the adjusted book balance, because this means now we had the balance, we added the extra stuff, it is our new adjusted book balance. It's taken everything into consideration. Of course, you know that both of the book balance and the bank balance have to be equal. So how do we make an entry? Let me give you an example of something that showed up in our bank statement that didn't show up in our books. So the first transaction is an NSF check from David Newhouse. He's a credit customer. This means insufficient funds. When he wrote us a check, we said cash goes up on the debit side and accounts receivable goes down on the credit side because we received the check. So we didn't think anything of it. We went and we deposited the check, but it was a bad check. NSF means insufficient funds, which means we didn't really receive that cash. So we have to go back and undo the transaction that we had first put. Cash did not go up. It should not have been debited. So in order to undo that, we have to credit it, right? To balance out. Anytime we want to undo, we just do the opposite of what we did originally. So initially we said it's going to go up by 550. Now we're just saying it's going to go down by 550, so it balances out to 0, because realistically there was no change. I'm sorry, 525, because that was the balance. But we also know that every single time there's an NSF check, we get charged $25 by the bank. They don't want to have to do that. They don't want to have to go through a long process of trying to deposit a check, not having enough money, deposit it, take it out, all that stuff. So they're going to charge us $25. So even though accounts receivable was for $525, cash goes down by $550, because now we have to pay that $25. Of course, we want to put that $25 in as a debit because it's an expense. Expenses are debited because it makes owner's equity go down, because someone has to bear the cost because they took it out of our account. They didn't care. And if you want, you can always charge David Newhouse for that $25, but the bank doesn't care. So you have to record at least that you've paid that $25 because the bank already took it out of your account. So accounts receivable is being debited because we're adding it back to their account. It's going up. Bank fees expense is being debited because it's making equity go down because it's an expense. And of course, cash is going down by the original $525 and then the additional $25 because of the additional fee. So this is an example of, you might look at your bank statement and say, okay, what is this $550? I don't get it. Well, as you dig deep, you might say, oh, okay, remember David Newhouse? He paid for it, it didn't work out, and then 25 of this is a bank fee. With that problem-solving attitude and with that problem-solving fee process, you'll figure it out that it's a bank fee and you'll be able to enter this transaction. This is a big reason why so much in accounting is problem-solving. You really have to work backwards to say, okay, this is what I have. This is the information that I have. Work backwards so that you can record transactions that might have been incorrect or didn't work out the way you thought it was. So problem solving is such a big part of not only bank reconciliation, but accounting in general. You have to be able to think critically. What happened? What could have happened? What is this? Where did this come from? What did I do originally? What was wrong? What do I need to correct? All those types of questions you need to ask so that you're a good accountant. Both of these items, as it points out in red, is a decrease in the cash account balance because cash is really going down. We're not receiving and we're paying for an expense. Finally, we're just going to talk a little bit. There are many different ways to use online banking. Many businesses will now go online as well. Even QuickBooks has a new, and many banks can partner with QuickBooks so that they do online banking for you. This makes it a little bit easier if it's a good software so that a lot of this stuff can be taken care of automatically. But some of the things we're going to talk about is electronic funds transfer, EFTs, you know about this, and then payments to government agencies. So all of these can be taken care of online as well. You just go to the Oklahoma Tax Commission or anything like that and you make those payments. And then finally, payments from customers to vendors. We all use online banking in our everyday life. So again, just be more aware that you are deliberate with your recording so that your bank reconciliation is easy. Most companies have hundreds, maybe even thousands of transactions. So you want to make sure that you can keep track of every single one. And that's it for week 3.